Markets, of course, continuing to react to the budget given in South Africa after what has been an extremely difficult 6 to 12 months in the country when it comes to the Finance Ministry. One of the economies, of course, which is closely linked is the UK. And to discuss that, I'm joined by Jeremy Cook, an economist from World First. Jeremy, what has the reaction been from economists like yourself and those in the City of London to the budget given?
Well, first off, I think we have to realise that this wasn't going to be a panacea for the economic problems that the South African economy has, and that the plan is very much geared towards the ratings agencies, which were quite active against South Africa towards the end of the year. We know that debt to GDP is likely to rise, but obviously cuts to spending have been brought forward to try and quell that in the short term. It has been a little bit around the edges almost. There's been no VAT increase, which is obviously very, very politically difficult, as with an income tax increase, for example. In the near term, the South African rand sold off as soon as the Finance Minister got to his feet and started talking, and is actually having its worst day for about 3 weeks at the moment. Also, shares in Johannesburg didn't sell off as well. So in the near term, I think it's more of an admission that there are significant risks towards the South African economy, and future budgets will have to do similar moving forward.
Now, the Finance Minister talked about the need for growth, and he mentioned commodities, of course, heavily reliant on the South African economy and linked, of course, to the London Stock Exchange. Can you just talk about how important the commodity industry is between the countries, and also just the historical ties between South Africa's economy and the UK's?
If you look at the South African export picture, you can see that 36% of its exports go to China, and most of that is raw materials. Now, only 6% comes to us here in the UK, but obviously a lot of the investment historically, that's been going into South Africa has been British companies, mainly based around resource extraction and obviously refining. Moving forward, we have to see a pickup in commodity prices if that investment flow is going to continue. We know that certainly here in the UK, our current account position is particularly weak, and a lot of that's to do with operations abroad not bringing in as much money as they previously did. South Africa is a prime example of this. So if the South African economy recovers, then the UK position will also be looking a lot better.
Okay, thanks very much. Jeremy Cook there from World First. Well, of course, economists and analysts and those bankers in the city will be keeping a close eye on just how this budget in South Africa is delivered over the coming months and year. Dan Whitehead, SABC News in London.